If you need to break free from broke and get saving and budgeting properly, in this video, I'm going to give you some important tips to get you started. And if you keep watching to the end, I'm going to give you a quick win to help boost your savings in retirement or start an emergency fund. Welcome back to the channel. And if this is your first time, a very warm welcome to the Economies channel. I'm Simon. I'm a chartered financial planner here in the UK. And together we're going to learn the language of money and wealth. We are dedicated to mastering money and making financial wisdom accessible to all. Today, we're going to be tackling a crucial topic, budgeting and financial discipline. Now, you've all felt the dread of an unexpected bill for the car, the boiler, the roof, or an unforeseen accident. So whether you're just starting out on your savings journey, or even if you're approaching retirement, this video has been crafted to help you understand, to plan, and to achieve your financial goals, starting with getting saving. But first, let me pop up a quick disclaimer to explain that this video is for education and entertainment purposes only, and is not to be construed or misunderstood as financial advice. Here's a quote from Oscar Wilde. "When I was young, I thought that money was the most important thing in life. And now that I'm old, I know that it is." Here are some shocking statistics in the UK. 20% of families do not have a financial budget, and 30% of all household spending is impulse buying. You need to imagine a budget as your financial GPS. It guides both your spending and your savings decisions, ensuring that you reach your desired financial destination safe and sound, but it's also something to refer back to, which will help keep you on track. So let's start with the basics. What is a budget? Well, it's a plan for your money, ensuring that you live within your means, but also allowing you to save for your future goals. Now remember, budgeting isn't about restrictions. It's about making smart choices and prioritizing what truly matters, which will inevitably at some point mean some trade-offs are needed for the greater good. Your positive mindset is the solid foundation for your financial journey. Now, we need to adopt a very positive outlook towards money. It's not just about the saving, it's about building a financial future for yourself that you can look forward to and be proud of. Think of this as a form of self-care or self-love. With each penny saved, you're taking a very positive step towards future stability and peace of mind, but also creating the positive habits and good behaviour which will stand you in good stead for years. But we all know that getting started is very hard and is a lot harder in practice than it is in theory. So we need to start by defining clear, achievable goals, whether it's a comfortable retirement you're looking for, creating an emergency fund, clearing credit cards, or any other debts for that matter. Have you ever promised yourself or dreamed of the perfect holiday or trip abroad, or even a once-in-a-lifetime cruise with the family? Or are you more looking forward to the peace of mind that comes with having a solid emergency fund with a more humble retirement and more straightforward lifestyle with perhaps lower expectations, and it's that dream that's going to motivate you and guide your financial decisions? To get started, we need to create a budget, and that's going to allow us to track your income and your expenditure. Get a piece of paper and create 3 columns and then label them as follows. Essential. Now these are outgoings that you've got little or no control over, such as rent, mortgage, bills, council tax, insurances, Wi-Fi and food. Lifestyle expenses, there's something you've got something more control over, such as holidays, running a car, eating out, having streaming services or gym memberships. Now you remember, 10% of household income is spent on holidays. Now you have to ask yourself, is this sustainable for the long term? You also need to remember that the average household, after paying those essential bills, has got just £700 left. And that means there's not a lot of room for unforeseen expenses or bills. Now the final and third column should be labelled discretionary. Now these are bigger ticket expenses, such as buying a new car, building an extension, reforming a room in the house, wedding expenses maybe, special events, gifts to the family, or even donations to charity. So a good habit is to get 6 months bank statements And this will allow you to track how and where you honestly spend your money. This should be backed by your credit card records as well. And this is going to offer great, but sometimes painful insight. This will allow you to develop an understanding about where your money goes and where you can adjust and make positive changes if necessary. Here are some more shocking statistics in the UK. 25% of the UK population have got no savings at all, and 37% have got less than £1,000 saved. Now, Legal & General is a large insurance company here in the UK, and they have created a report called the Deadline to the Breadline, which really explains our overall financial resilience. Now, what that means is, how long can we pay our bills without having to resort to overdrafts, credit cards, or worse still, payday loans? It's this financial resilience that is now down from 24 days in 2020 to just 19 days in 2022. And I've included a link in the description below. An emergency fund is your financial safety net. So you need to aim to have between 3 and 6 months worth of your expenses, depending on your circumstance, of course, in a bank account. Now, a single person may not feel that they need that amount, but a young family or someone close to retirement might think that that amount of money is right for them for their own peace of mind. An unforeseen expense of any kind is a risk to the household finances, and this needs to be reduced and mitigated where possible. This risk to the finances means that you cannot rely just on your monthly salary, and you're going to need to consider having other sources of money or savings to fall back on. This additional fund is crucial for unexpected events, which will reduce the need to dip into your savings or even your retirement funds to pay the bills. Now, if you're finding this video useful, then please consider hitting the like button and subscribe. If you already managed to create an emergency fund, well done, that is a battle already won. The next step is going to be to look at your workplace pension or your personal pension. Now, these are not just savings, these are investments for your future self. Plus, they offer tax relief, which is almost like getting a bonus from the government just for saving. ISAs, both cash and stocks and shares, these are also excellent tools to have. They offer tax-free growth, making them very, very powerful allies in your savings journey. And we're going to cover these in more detail in future videos. But if you've got any questions, please leave them in the comments section below. Beyond pensions and ISAs, you might want to consider a term deposit bank account for some of your short-term goals, especially if you can afford to put their money away for a year or two. These accounts can offer higher interest rates than just standard regular savings accounts, and this will allow you to help grow your money a little bit faster. Remember, diversification is key. Do not put all your eggs into one basket. We also need to be aware of our behavioural biases and how to control our emotions. We're often very tempted to spend today rather than to save for tomorrow. And we need to recognise these tendencies and actively work to counter them where possible. Remember, discipline and sacrifice today will lead to comfort and security tomorrow. So here's some practical tips to get started. Pay yourself first. This means setting up a direct debit and automate your savings. This will allow you to ensure that you consistently put money aside for the future. Review and adjust your budget regularly, maybe annually, or when there's been a material change to your circumstances, such as a promotion at work maybe, or even a redundancy. You're going to be able to identify where the changes can be made. You also need to celebrate small victories like reaching your emergency fund target, clearing or paying off a credit card debt, and these are going to allow you to motivate and keep you going for the future. You need to measure your successes not just by the amount that you save, but also by the financial habits that you develop. Success is not just about numbers, it's also about psychology and also emotions and how they make you feel. As your circumstances change, you need to be flexible and adjust your budget. Life is unpredictable, and so is your financial journey. Now, I promised you a quick win to boost your pension saving or to help you build an emergency fund at the start of the video. So I'm going to put a graphic up here to explain how this works in principle as a case study. On the 6th of January 2024, the government in the UK reduced its main rate of national insurance contributions paid by employees from 12% down to 10% to lower taxes and to drive growth. This means that about 27 million people should see their take-home pay go up in their next pay packet. I'm going to use a basic rate taxpayer example for simplicity and to keep the video from running over. However, the benefits for a higher rate taxpayer is going to be even greater. We did talk earlier in the video about the compound effects of even the smallest financial steps. On average, basic rate taxpayers will see their income rise by about £63 a month. If this was invested into a pension, they would also receive an additional £15.75 in tax relief. So that means a gross total contribution into the pension would be about £79 a month. In this example, I'm going to assume a 35-year-old on an average salary in the UK who's looking to retire at age 65. That means they'll have a 30-year investment horizon. If they took that £79 and had an average return on their investment, the additional pension pot they could expect to have at age 65 will be just over £62,000. If they were lucky enough to enjoy above average returns over that period, then their additional pension pot will be a lot higher at close to £142,000. Now that could be the difference between either a better standard of living or even the ability and the option to retire early. And that's definitely a better return on the money than spending on either a takeaway food or a couple of nights out in the pub each month. The compounding effects of the action of taking even small positive steps can be magical. So here's a quick summary of the video, which is urging you to take the necessary steps to get saving. 37% of the population has got less than £1,000 saved. 20% of all spending is on impulse buying. The average household has got £700 after all the essentials have been paid, and 20% of families do not have a financial budget. Get 3 to 6 months bank statements together, backed up by credit cards, to see your income and spending patterns, and obviously where changes can be made if necessary. Get a piece of paper, divide it into 3 columns, headed essential, lifestyle and discretionary, and be honest with yourself with no cheating. Pay yourself first and set up a direct debit into your bank account, investment or your pension. Control your emotions to overspend and to impulse buy. Revisit and review the budget regularly and make sure you celebrate those successes along the way to reinforce all those good term saving habits. Now remember, the journey to financial freedom is a marathon. It's not a sprint. Start small, stay consistent, and the results will be transformational. If you like what you hear and you like what you see, please consider giving it a thumbs up and hit the like button. We will be sending out videos every week or so please subscribe so you don't miss any content. And finally, this is your channel and your voice. So if you've had a positive or even a negative financial experience, please let me know in the comment section below. If you'd like to see our day one video when we first got started about getting going and making that first step, then click the link in the video above. See you next week.